Silicon Valley Bank is collapsing, the second biggest bank failure in the US history. What does it mean to you, and most importantly, what does it mean for the crypto world? Stick around as we explore the larger implications in the failure that shook the US financial industry. SVB, one of the largest banks in the country, failed and its deposits were seized by regulators. This marks the largest banking failure since the 2008 financial crisis and the second largest ever. SVB had been a highly respected bank that had grown alongside its technology clients. However, things took a downward turn on Wednesday when the bank announced that it needed to raise $2.25 billion to shore up its balance sheet. What followed was a rapid collapse that led to the bank's seizure. Members of the VC community are lamenting the role that other investors played in SVB's demise. Ryan Falvey, a fintech investor at Restive Ventures, told CNBC that this was a hysteria-induced bank run caused by VCs. He added, "This is going to go down as one of the ultimate cases of an industry cutting its nose off to spite its face." The episode is the latest fallout from the Federal Reserve's actions to stem inflation with the most aggressive rate hiking campaign in 4 decades. The ramifications could be far-reaching, with concerns that the startups may be unable to pay employees in coming days. Venture investors may struggle to raise funds, and an already battered sector could face deeper malaise. The roots of SVB's collapse stem from dislocation spurred by higher rates, as startup clients withdrew deposits to keep their companies afloat in a chilly environment for IPOs and private fundraising. SVB found itself short on capital. The sudden need for fresh capital coming in on the heels of the collapse of the crypto-focused Silvergate Bank sparked another wave of deposit withdrawals Thursday. Customers withdrew a staggering $42 billion of deposits by the end of Thursday, according to the California regulatory filing. By the close of business that day, SVB had a negative cash balance of $958 million, according to the filing, and failed to scrounge up enough collateral from other sources. SVB's failure has caused widespread concern in the U.S. financial industry. Many are calling for greater regulation to prevent such events from happening in the future. The fallout from this episode could be far-reaching, with concerns that startups may be unable to pay employees in the coming days. Venture investors may struggle to raise funds, and an already battered sector could face a deeper malaise. It remains to be seen how this will play out in the coming weeks and months. The collapse of Silicon Valley Bank has sent shockwaves through the crypto industry. While it was primarily venture capital firms and tech startups that were hit the hardest by the bank's closure, many crypto companies have also reported their exposure to SVB. USDC was created by a consortium called Center, which was founded by Circle and Coinbase in 2018. Circle is a global financial company which offers a wide range of products and services for digital currency transactions, while Coinbase is one of the largest cryptocurrency exchanges in the world. The goal of Center was to create a more stable and reliable cryptocurrency that could be used for everyday transactions and payments that could be trusted by businesses and individuals alike. By pegging the USDC to the dollar, Center sought to eliminate some of the volatility and uncertainty that is common in other cryptocurrencies and to create a more stable and predictable digital currency that could be used for a wide range of purposes. Since its launch, USDC has gained significant traction in the cryptocurrency world and is now one of the most widely used stablecoins on the market. Its success has helped to legitimize the concept of stablecoins and has opened up new opportunities for businesses and individuals who want to use digital currencies for everyday transactions and payment. So the idea behind a stablecoin like USDC is that it's a cryptocurrency that's designed to maintain a stable value to a particular asset or group of assets, typically a fiat currency like the US dollar, euro, or yen. They achieve the stability through various mechanisms such as collateralization, algorithmic stability, or a combination of both. Stablecoins are useful for traders who want to move funds between exchanges, who want to park their funds in a stable asset during times of market volatility. They can also be used to purchase goods and services, pay bills, or transfer funds across the borders. In summary, USDC is a stablecoin that's pegged to the US dollar, and stablecoins are cryptocurrencies designed to maintain a stable, valuable relative to the particular asset or group of assets. Circle, the issuer of the world's second largest stablecoin, USDC, announced that some of the cash reserves used to back USDC and tie its value to the US dollar were held at SVB. Coinbase stopped the exchange of USDC to USD over the weekend, and the price of USDC plummeted below its dollar amount over the weekend. As of the time of this writing, it is slowly recovering, but it remains to be seen what it will become on Monday. This has shaken confidence in what was once considered to be the safest, most stable bet in crypto, now has an uncertain future. Crypto-focused venture capital firm Pantera, one of the largest in the world, may also have some exposure to SVB's collapse. The Avalanche Foundation, which supports the Avalanche blockchain, has disclosed an exposure of little over 1.6 million to SVB. Yuga Labs, the company behind the dominant NFT collection Bored Ape Yacht Club, is also exposed to SVP, though the extent of its exposure remains unclear. Proof, another leader in the NFTs, has confirmed that it holds cash in SVP, but has diversified its assets across ETH, stablecoins, and fiat. Finally, Nova Labs, the startup behind the decentralized network and internet provider Helium, has disclosed that it has some funds stuck in SVP, but the majority of its assets are in other institutions. While the full impact of the bank's collapse in the crypto industry remains to be seen, it is clear that many companies will be affected in some way, highlighting the interconnectedness of tech and finance industries. But this disaster is your gain. No better time to sign up for a free crypto faucet and start rolling when the prices are low. Use the code USD Coin to get some free rolls on all the faucets you like best, so at least you can get paid from this crash. And see you when we post our next video. And remember, keep on rolling.